trading account is up 16% year to date, 51% in 1 year, and a crazy 80% returns in 2 years. That's a total profit of $45,000. But here's the thing, I'm planning to adjust my strategy going forward. Let's break it all down. So my swing trading account is with Charles Schwab, and let's go over my performances so far. So 16% year to date, which is $14,000 in just 1.5 months, and 51% in 1 year, which is $34,000, and 80% in 2 years, which is $45,000. So overall, my swing trading account is standing at $101,000 now. I also have my Roth IRA account linked here, but that has a very small amount of $3,500 and I'm not active in it. As you can see, I have close to $30,000 in cash in my swing trading account, which helps a lot while taking bigger trades. I've been taking short-term trades, holding for days or weeks and aiming for $1,000 to $2,000 per trade by buying 500 to 1,000 shares at a time. And this strategy has worked well for me, but now I'm tweaking my approach. Now I'll still swing trade, but I'll be more selective, especially in my Robinhood account. My goal is to keep less risk per trade, only buy stocks likely to bounce back, take smaller positions compared to Schwab, and use tight stop losses to protect my profits. Instead of jumping into large trades with 500 to 1,000 shares, I'll be focusing on lower risk setups and looking for technical support levels before entering trades. So moving forward, I'll still be active in Schwab, but I'll take some trades in Robinhood as well. This means in my Schwab account, I'll be taking larger and aggressive trades. In my Robinhood account, I'll be taking smaller, safer trades with stop losses. And my main goal is to get consistent returns with reduced risk. And for swing trading, I use Thinkorswim platform, which is owned by Charles Schwab. I use the scanners and all the charting tools to determine my entry and exit points. Just to show you quickly, I have scanners for cup and handle patterns, bullish flags on MACD indicators, and I have plenty more, but recently I stopped using all other scanners and focusing mostly on moving averages and MACD signals. I'll cover these in my next videos. The goal isn't just to make money, it's to protect capital while growing my account. The market is still at all-time highs, so I'm being very careful where I deploy my cash. I also want to suggest something really important for anyone who's just starting out or even intermediate traders or investors. Please do not buy penny stocks. There are many YouTubers who will keep saying buy this penny stocks to change your life. But trust me, stay away from those. I've had many bad experiences in the past, and that's exactly why I started this channel, to share my experiences and help educate at least a few people on where the real money is made. It's not in penny stocks, because to make money in penny stocks, you have to be fully focused on every move. You never know when the big investors will dump these stocks, and once they do, retail investors like us are left holding the bag. Instead, buy big and reliable stocks, the ones you actually use in your daily life. These companies have strong fundamentals and they are the ones that will help you build wealth over time. Funds, banks, and legendary investors like Warren Buffett never buy penny stocks, and there's a reason for that. These big players focus on high quality businesses with strong fundamentals, not speculative, low volume stocks that can be manipulated. Penny stocks are often volatile, illiquid, and lack real financial strength. Institutions and super investors put their money in companies with proven track records, solid cash flow, and sustainable growth, not in stocks that can crash 50% overnight. If the smart investors in the world avoid penny stocks, why should retail investors like us risk our hard-earned money on them? Think about it. What do you think of my swing trading strategy? Do you swing trade? Let me know in the comments below. And if you want to see my trades in real time, make sure to subscribe and follow along.